I mean, unless they do. Mm, mm. I guess I could just do that. $68. So February 11th, 2025. Isn't that interesting? Just being thorough. I guess I can't help it. Hmm. Yeah. Hmm. So that definitely would be interesting. Okay, that definitely would be interesting. So it should be a surprise to nobody that, based on Friday's price action, that we was going to see a continuation higher. I was looking for a quick pullback, but it doesn't look like the market is ready for that. So I'm just going to take my limit off the board, and I'll just wait for the price action overnight before making a trading decision. But let's actually talk about Friday. Obviously, this range right here, this range was being heavily protected by the bulls. The bears were aggressively trying to break through this range, and they failed. They got trapped underneath this range, and this is the result of that. So, I want to see what happens with this range. Make sure I mark it on this chart as another range that if we should see the bulls fail to protect this area, uh, we should get a move back down. We should if they fail to hold. But you know what, man? I'm actually gonna put a sell limit up here. I think if we get to this area, I think we sell. Somewhere around this area. I think 318 is probably a good spot. And I'm looking for a retracement back into this range. And let me see what this does. A point back, huh? 2, 3, 4. That's 58. I think this is 60. So I think what I'm gonna do. Hmm. Hmm. Let's just do something, huh? 72. Okay. Mm. So yeah. Yeah, so according to the CFTC data this week, I just got done inputting this data. So it looks like right now the market is about 56% long this week and about 44% short. Obviously, we had a decrease in the last 2 weeks. You see that at the end of January, we had 31,000 contracts net long right here. We had 31,000. It got reduced to 19, and now we're seeing another reduction to 14. So that doesn't mean that we should jump being bearish because obviously there's still 56% long, but maybe we won't get an expansion. Now, the CFTC data has been very accurate. Last week, if you followed it, it was 58% long last week, and rest in peace to whoever shorted and went against the market because they thought it was too high. Because the market kept going up as it is doing tonight. I'm looking at a lot of forums, and a lot of people did short this move. This is not a move that you can short. I mean, you can take a quick scalp, but the way that this market is structured right now is definitely not ready to short. They get comfortable in a short. Getting comfortable in a short would kind of be dangerous for your account. Trying to be able to find something to go long, because right now the market is trending higher. The market is definitely trending right now. Looks like we got a hidden channel right here too. All right, so let's see how that looks. Yeah. Yeah, so what I'm betting on is for the market to come up into this area and we see a rejection around that 320 area, because we all know the psychological levels on the Nasdaq, the 20, the 50, the 80, and the 100. Those are all the psychological levels on the Nasdaq. So I'm going to make the assumption that we should see a reaction around that area, and that's what I'm betting on. We'll see if we get that though. We'll definitely see if we get that. Because obviously the market ran right past the 244, 245 level. We're already at I think we're at 300, right? Yeah, we're about a couple of points away from 300. What is that? 32? 32 points. 32 points away. Now we know that the first time we don't crack 300, they kind of reject price around 295 ish. That's usually where we see the breakdown. Mm. That's interesting. That's interesting. $327.50. I want to make sure that I want to keep this. Okay. You would just see a move right back into that area. Hmm. Hmm. Yeah, today's definitely probably one of those days. But yeah, we can definitely talk about what happened last week Friday. So I was able to get my money back from the stream earlier. I will say that as I was looking at other people's streams, other streamers that stream traded the Nasdaq, I was happy to see that I wasn't the only one that thought that the market was trying to short. We did make money shorting the market, but we could have made more sticking with the longs, even though Friday was definitely challenging. It was definitely challenging on Friday. But hey, what's up, Bandit Blitz? What's up, man? Friday was definitely challenging. The one thing that I hated about Friday was a lot of the price action that I ignored because I had a bias. I allowed my heart to take over instead of actually paying attention to the charts, and I lost $4,500 as a result of that. But I was able to get all that money back plus, and end of the day being up around about 33K. I mean, yeah, about 3,300. So I was able to get that money back just by saying fine. Obviously, the Bears don't want it. Once I saw that they were trapped right here underneath this range, this is when I knew that I should go long. Once they trapped themselves underneath that range, that's all they wrote because the Bears was really trying to slam into this range right here. But unfortunately for them, they just couldn't. Now, I was one of the mistakes that I made on Friday was uh this range right here. I should have known, or I should have been more aware about this range because as soon as the market opened, I went long because I figured that if the market wanted to go short, then it would go short. But once I saw that it formed this small little head and shoulders pattern right here, I went long as it pumped into this level right here. Excuse me. Because the bears were trying to sell into that trend line, but as they were failing to sell into this trend line, I figured, well, I'll just take the long And if I'm right on this, I'm just going to get a short squeeze to the upside. And that's exactly what happened. And if you traded Friday's open, that 102 was a wall before they got that short squeeze. I mean, the Nasdaq can be very deceptive. Once the price action is painted on the chart, once it's painted, you think like, oh man, this is easy. No, anybody that traded Friday's open know that this right here was going back and forth. It was choppy. It was slow. It felt very bearish. It felt really bearish. So kind of going against that feeling in terms of what the charts were telling me to do. That's how I was able to capture this move right here. And I left a lot of points on the table because all I needed was a certain amount. And once I got that amount, I closed that account because, I got to stay consistent in these accounts. But I don't know why I fought that, because I knew 102 was a wall initially. And we all know that once resistance turns into support, and once they failed right here, that should have been a dead giveaway going into Friday's price action, that they failed to take out that low right there. That should have been a dead giveaway, but I had a bias. And that bias cost me $4,500. And just taking a deep breath, stepping back and looking at the charts and saying, well, they're not trying to get here. They're not trying to. So let me just flip long. And I was able to get my money back. I was able to catch this whole move going up. I was able to add into this and catch this move. I got out right here and I just walked away from the screen because Friday was definitely challenging. And as I said, that as I was watching other streamers, I saw exactly what I was doing, just being stubborn. I don't know what it is about bearishness, about taking a short setup, and why you'll get to a point to where it's like, no, either I short this shit and it works, or I liquidate my account. I don't know why being a bear has that much power, but it does. So once I saw that, I was like, man, that's exactly what the hell I was doing. I almost said something in the chat, but I was like, no, I'm not gonna do that, because I know exactly what the streamer is going through. I want that short. I don't want to miss it. It's too high to buy. It feels bearish. I know if I just hold out and just endure, then eventually I'll be rewarded. And unfortunately, he had to close out that trade red. So, and that was unfortunate. So, but now I know that once price comes back into this range right here, I know that once we see that break, it's gonna get nasty. We're gonna see a stop run underneath this range. And it's gonna get nasty. I don't know where it stops at though. I mean, we could see actually, honestly, I do think that we see a move back down to 22K. I'm pretty sure there's going to be buyers down here. I'm going to be looking for this area to be a buyer. We could see an initial sweep of liquidity and then a pump right back up. We could see that. We could see a move back down to 969 right here in this area, this range of liquidity right here. We could. But it's going to be the price action really has to develop, because what we were talking about all last week, we are in an area of supply, untested supply. This area is definitely unbalanced up here. We had a break of structure here all the way from December 18th. We've had this big move down, and now price is coming back up and it's retesting these levels now. So it's always going to be that game of does the bear step up here? Or let me rephrase that. Does the bulls take their profits here? There's no bears in this market. It's just bulls. Does the bulls take their profits here? I mean, that's the game. Or are the bulls going to continue to buy? And that's the question. Because right here, we did see like a small rejection right here. When price came into this level, we did see a small little rejection right here. Like 160. See that initial rejection. Price came back up. We saw, and then they blew past it, use it as support, and then we saw this move going to the upside. So this area right here, let me turn this color. Let me actually put this further into the future. I'm gonna turn this thing orange so I know to kind of watch out for it. Turn it orange red. Okay. Because I think that level right there is gonna probably play a significant role. Because if we do see price roll over, I'm pretty sure either the bulls are going to step up here or they're not. And if they don't, then we could see a move down. But we have to see what they do when price retests that area. Obviously, they blew past 245. Not saying that's not an important level, but they blew past it. So obviously, it doesn't mean nothing right now. I mean, it could be a level where they use as resistance as it breaks down if we see that, but right now it means nothing. And obviously we have that 350 psychological level that it never touches the first time. So honestly, I don't even pay attention to it the first time. Yeah, probably like this little high right here. We'll see if the market wants to sweep this high at 227. We'll see. We probably see a move at 300. I mean, there's a lot of areas where the bulls can take profits. I mean, if the bulls just pass right through all this, I mean, I'm not going to be surprised, but uh, these are areas I'm going to be looking for. And then right around the corner, it's all-time highs at 450. I mean, the question is the bulls going to trade past this area of potential resistance without no rejection? Is that what we're going to see? And if we do see that, are we going to see a fake out to take out all-time highs? Are we actually going to see them take out all-time highs? And will they create new all-time highs? And once the bulls create a new all-time high, do we see a rejection from that? A lot of profit taking of, the bulls that just got goaded in, the ones that are still buying once the real money, once they've stopped buying, and now they're selling their shares to aggressive bulls or retail bulls that's holding the bags up here at the top to fuel this market lower. So we definitely gonna have to keep an eye on that this week for sure. ES on the other hand is right there. ES is right there. We're about what? It's the all-time high on the ES is 183. So right now we're at what? 141. So we got 42 more points to go on the ES, and the ES been moving. ES has been moving like it's on a mission this year. So we could see. I mean, I would highly doubt that. Honestly, I mean, 147. I mean, do they? The question is, do they? I mean, all right, we already saw the rejection at 147. I was about to say, I was like, damn, but we saw the rejection on 147. So now we're gonna probably break above it and use it as support now. That's probably what we see with 147. The question is, when did this happen? Because I was actually looking for this level to short. When did this happen? 7 on Friday. Or what is it today? The 16th? This happened Friday. I didn't even see this happening on Friday. I was actually looking for like 148 the short. But I guess I've been focusing on the Nasdaq so much lately that I've been kind of ignoring the ES. I'll look at it, say, "Oh yeah, that's actually a good area to short," and just completely ignore it. I mean, the Nasdaq, the profitability on the Nasdaq. Like I've been doing a lot of homework over the weekend with the Nasdaq. A lot of homework with the Nasdaq. Honestly, I can see why people prefer to trade the Nasdaq. The Nasdaq makes moves, and it makes the smallest moves. So like on one mini contract, 33 points is about $720, I think. Let me do the math on that. So it's 660. I think it's 36 points, if I'm not mistaken. Yeah, so it's like 36 points, $720. The Nasdaq sneezes 36 points. So just imagine 72 points, 60 points, 80 points. 50 points is 1,000. You get to 80 points, that's $1,600. And I've been doing a lot of homework. When I say I've been doing a lot of homework, I've been kind of seeing how much the Nasdaq moves. The Nasdaq, she's a mover. She's definitely a mover. I mean, obviously, I don't need to tell you that, but you get into a good spot with one mini contract with a 27-point stop, which equals $540 loss if it's touched. If you're entering at a good spot, you don't even have to worry about your stop. You can just focus on your target, and the Nasdaq will take you there. It will take you there because, like I said last week, last week on Friday alone, or actually I haven't even put the data in for Friday. On Thursday, the Nasdaq opened with a 175-point move to the downside. Uh, the bulls regained support and moved up 371 points to the upside. And then at the end of the day, it was a 54-point rejection. There was so much money made just on Thursday. And on Tuesday, the market opened with a 340-point move to the downside. And the bulls regained control, took out pre-market highs with a 352-point move to the upside. So the Nasdaq moves. With a like if you were to caught the bottom and got out at the top from a 352-point move, that right there was 7K on one contract. And you just can't beat that. The ES doesn't move like that. The Nasdaq will go straight, and then depending on where it's trying to go, you'll get the stairs. But I think that's what we all enjoy about trading with the Nasdaq. But if you want reliable trading, obviously the ES is definitely going to be where you should be at if you prefer predictable price action, because you'll get that with the ES. You're just trading profitability. But I mean, if you're getting at a good spot, I mean, you have to wait for it, but the ES will take you there too, because all you really need is 11 points to make $560. 560. In over 5 days, that's about 3K. More than 3K, obviously. Actually, no, it's 2,800. Only thing I hate about the ES is like you need what? You need 13 points, I think. 13. Yeah, even with 13 points, that's 675. I think like 14 points on the ES to just make $700 on one contract. And honestly, that's a lot of price action for the ES to do 14 points. You would need a range breakout for 14 points. You need to get into a area of support to easily get 14 points. You got to sell that resistance. You can't trade in the middle. You have to be very patient to trade the ES to get stuff like that, just to only get $700. When shit, you can just hop in a Nasdaq trade, get 36 points, and there you go. I'm starting to see a lot of areas of resistance on the ES though. At 163, yeah, 163. So I mean, they double topped at 163, so that shouldn't have been a surprise to anybody that we was gonna get a drop at 163 to retest of that. Especially when we saw that this big move down from 163 on the ES. They came back and retested that area and got that move down. I mean, I doubt 172. Doubt 172. Because usually that's the pivot, and then when it pumps back up, that's where they sell at. And then that's the pivot, and then they come back up, and this is where they sell at. So I'll be looking at a range between 172, 175. I mean, unless they want to take out all-time highs if we get up there. I mean, 152, 155, 150, 150 to 155 looks like an area too. I'm trying not to let my bias get in the way. My bias right now is the market going to take out the all-time highs? Because if it takes out all-time highs, then of course we're going to come up here. But if the market's not ready for all-time highs, we can see price come up into this area and then we see a rejection. And we also got to remember that on the Nasdaq, I don't know on the ES because, like I said, I don't necessarily pay attention to the ES anymore like I do the Nasdaq. But we got this area right here on the Nasdaq that also has a red square encompassing it, enveloping it, whatever word you want to use, encasing it. This is another red range right here that we found. We saw the market dip into this range and then come right back, and we saw this move. Now, I don't think they did this. I don't think they created this range right here for not for a reason. Obviously, this range is going to definitely be important in the future. I mean, if we see a break of this, I mean, we're going down. If I'm not mistaken, we got support probably at 150, probably all the way back in the 20Ks, 2090s. And there's no support. The market's been trending the entire time. All the markets did is trend. So that's not support. That's only fuel for the market to go lower. Once the bears break that, they'll just use some stops to fuel this market lower. And if we touch this range, we're going lower. Where's that range at? 525? Yeah, 525 is that range. 525 is that level. 525 is that level. But we'll see. We'll see. Yeah, so that's that level right there. You can see that, I mean, there's no support. We touch 415 again. I feel I mean, if we lose 500 and then we turn around and we lose 415, I mean, shit, that's just gonna fall out. There's no support to the left. I highly doubt this holds again. Maybe it does. Maybe it does. We got this range at 396. That hasn't been tested yet, I don't think. Mm. Yeah, and this is all the way back in October of last year. We haven't touched this range since October. And it's highly likely that there's going to be passive buy orders in this area if we do see price dip into this. So this is a range that I do expect to see price react at. 360. Yeah, that's probably like a good area right there. Yeah, 360. Yeah. Because I mean, I doubt this holds. I mean, why would this hold? I mean, it might hold for a bounce, probably back up to 940. And then this is where the bulls would have to prove themselves here. If we do see that break below this 940, and then we do see a retest around 770, 760, they probably bounce it right back to 940, and then we'll see a rejection. And like I said, this is all based if they don't take out all-time highs. Because I mean, that's the next objective for the bulls. That's the next objective. Now, I mean, this is tricky. I mean, if we're gonna go with the charts, this should continue to go up higher. Even if we do see a pullback, the charts are suggesting that the market is trending. We're making higher highs and we're making higher lows as the market goes up. So the market's trending. So I mean, if we do see a pullback, then I do expect, for the buyers to step up. But boy, are you buying? You're buying mighty high, but it's not high unless the market. Okay. It's not high if the market is still respecting bullish structure. If you get a dip and you're willing to take the risk, it's not high. All I know that right now is not a short. I know that. I mean, if the bears even manage to bring this down, you got too much support, too many areas where the bulls will come back and buy it at. It'll be a stressful short, even if it does work. Mhm. Yeah, David. Yeah, that's kind of why I kind of go back and forth with the ES. I love the simplicity of the ES. I love the trade by funded accounts in the ES. But lately, I've been kind of trading the Nasdaq in my funded accounts. Only use 36 points to get $700. Shit, I think. I mean, shit. If you came in at the open, you already made. This was about like what? 36 points was right here. Shit, just retesting the high. You saw the pullback at the open. They pulled back. They found support. You got in at the low. Retesting the high was $700 plus. So, I mean, the low of the session was 196. Right now is at 270. Yeah, about 74 points on one contract. If you held, you're up about $1,500 right now. The ES, shit, you ain't up $1,500. Let's see how much you up if you on the ES. Let's see how much you're up right now on one contract. All right. So in the session low looks like 131, 142 is the high. Yeah, you're only up $500 right now. You're only up $500, $550 to be exact, minus commissions. Yeah, this is why I try not to. I don't focus on the ES as much anymore. It's the Nasdaq. It's the Nascrack is where the money is. At this point. Yeah, I'm not. No, I don't play those games. I'm not playing that game. Yeah, I'm not playing that game. That's just to get free labor in hopes of winning a prize. I ain't playing that game. But what I am excited about, I know I talked about this last week, but MFF is coming out with an account that goes from eval straight to a live account, which I think is pretty cool. But they static drawdown, and y'all guys know how I love static drawdowns. I'm pretty sure there's going to obviously be consistency probably somewhere in there, probably like 20, 25, 20% consistency somewhere in that. But I'm very excited to see what they actually what they bring out, because that's definitely going to change the game. Definitely it's going to change. Oh yeah. Something else that something else that I feel like I should share. Like I said, I was doing a lot of homework on the Nasdaq this weekend. I will say this: the Nasdaq is definitely a bitch. She definitely is, and she openly does what she does, and she does it proudly. And this is what I mean. I was looking at how the Nasdaq reacts at certain levels, and how she will kind of manipulate you and kind of draw you in and make you feel that you're on the wrong side of the market just to stop you out, have you flip, and then stop you out again. And I know a lot of traders become victim to, damn, I just went short, and then the market uh, retraces and stops me out, and then it's like, fine, I'll go long, and then it's a fake out, and you're stuck in this back and forth to the point to where your account is at max drawdown. So this is what I found. Let me see if I can find a good example. Something like this. Let's just say that right here, 920 was your level, right? And the market and the Nasdaq goes right through it and stops you out because you're thinking, oh, they found support here previously. I'm going to get in long here if we do see a retest, and I'm just gonna have my stop somewhere, right? I usually keep a 27-point stop. So a 27-point stop, I would get stopped out right here. Literally almost at the bottom of this move, I would get stopped out. Just for it to come back to my break even and probably hit my target. So as I was doing the homework over the weekend, I saw that if you get stopped out of your trade and you see the market comes back to your entry, What I found 9 times out of 10 is to re-enter where you were originally in at, and not only will you get your money back, but you'll probably be profitable. Because this move right here, so the high of that move, I mean, just this move right here, 978. So if you had a 27-point stop, I mean, I got my money back plus 27 points. But if I didn't take my profits, I mean, look at it, it comes right back to my break even. It doesn't stop me out this time. It goes nowhere near my stop. And you get this monster move to the upside. And the Nasdaq does this consistently. Consistently, she does this. And I was thinking to myself, like, wow, kind of like right here. This is another area right here. Something else that she likes to do. She'll get into an area of resistance, show false breakout, get the bulls chasing. Oh, that's a breakout. That's a breakout above these highs because this was resistance. You can tell that this was a resistance because of the stop run. The stops that got ran right here. You can tell. And then they come and they pull back, and then the bulls pile into this damn thing, right? And this is the false breakouts. And then that's where where your original entry is, your original entry short. If you were to get right back in at your entry, you'll get that real move down. And the Nasdaq does this. And I was like, wow. If I didn't do the homework over the weekend, I wouldn't have noticed this. And I'm gonna share that with you. And something else that a conclusion that I came to. If you become emotional with the Nasdaq, she'll use that power against you. She'll use your emotions against you. I mean, we all know that. You don't need me to tell you that. But if you really believed in the level that you got in at, and you just wait for the reaction, like, okay, you got stopped out of the trade, and like, fine, I got stopped out. And I'm pretty sure, I mean, I do it sometimes too, where it's impulsive to get back in where you get stopped out at. But if you just wait and have it come back to the area where you were looking at originally, and you see the reaction that you was originally looking for, just waiting and getting back in, having your stop at the same spot, you're going to catch that move. You're going to catch that move, and you're going to get all your money back plus. And it just goes to show that the Nasdaq will use your emotions against you. You will blow your account based on the emotions that you show. Another thing that I've seen is that even though the Nasdaq will shoot up, and I understand, I do it too, so I'm not sitting here to say that I don't do it, but I'm making it a point to just wait for that pullback, because the impulsive move up. I mean, yeah, I mean, this could be your day right here, because I mean, if you've seen this breakout right here around 670, and the high of this candle is around, the high is this candle is at 770. So this was a 100-point move right here. $2,000 on one contract. And like, I mean, that's all you really need if you caught the original move, but you just waited for the pullback. I mean, look how much more money that you got if you were patient with the Nasdaq and waited for the pullback. You got the better move. And that also something that I continuously see happening with the Nasdaq. Just waiting for that pullback. You just don't chase it, wait for the pullback right here, and you get the better move. Right here, another one. You see the push up, you wait for the pullback, you'll get the better move. You'll be more profitable with the second wave, trying to chase the first one. You'll get the better move. But it just requires a lot of patience, and unfortunately the Nasdaq, we kind of lose that patience when you trade the Nasdaq. So who knew that sitting on your hands and just waiting for the market to retest the previous area where there was a show of demand and there was a show of supply, you can be more profitable. You really don't have to risk a lot of money in terms of where you place your stop because the structure is already there. And you can just enjoy this nice short squeeze higher or a stop run lower, something like this. Where you see that obviously, and this is exactly what I'm looking for at that range, that 102 range right there. Something like this, where you got the market obviously protecting this range right here. And obviously that was 102 last week. So that 102 level was definitely this right here. And this is what I'm looking for. So this is what I'm looking for next week. I'm looking for them to potentially run that level and be a part of that short run down. That that sell stop. So definitely gonna keep my eyes on that next week. But I'm not gonna force the trade or anything. I'm not gonna force that trade because the Nasdaq can definitely be nasty with her fake outs and stuff like that. She can be nasty. Like right here, I think this is obviously the trap bulls. But I'm not gonna get in high here. I'm just gonna wait. Like I said, I'll wait until tomorrow. I have my entry where I think the market could potentially go. Nah, I'll just keep it at 818. I'll take the drawdown if need be. If I'm wrong, I'm wrong. I'll only lose $540 if I'm wrong, but I'm able to make about $1,500 if I'm right. Actually, I must be tripping because I do not have Thinkable Pimp up at all. All right, so yeah, yeah. I'm not surprised by what I'm seeing right now in terms of the liquidity and where it's at. I'm not surprised. 275 looks like they're trying to short this. I mean, they're trying to short the top of this range. Oh shit! You know what? Hmm. I mean, would that count? Would that count as them buying that high? Would that count? Huh? Because 245, they kind of already tagged 245 and bought the dip. Would that count? Does that count? That's the question. Does that count? Because they ran 245. Are they gonna come back and test 245 for a move higher? Hmm. I mean, it is right here at this trend line right here. Hmm. Hmm. Or is this another situation where we're gonna get a false breakout? That's actually another good question right there. Will this be another false breakout? Well, obviously, I'm not going to blindly put a limit here. I'm not, but that's what I've been seeing a lot. I mean, I've shown you the examples of where I was seeing with all these freaking false breakouts because we was, or at least I was looking for 245. I was looking for 245 right here at this range because obviously, I mean, I'll show it to you guys again. We had that break of structure at 245 all the way back in December, if I'm not mistaken. Yeah, this is all the way back in December. We had the break of structure December 15th at 245. And the market just ran through it. So the question is, 245 was obviously resistance. Uh, we got a break above it, and now price is going to come back and test it. Will it hold? If it does hold, then we'll see higher prices. If it does not hold, though, we should see a pullback. Should see a pullback. But as bullish as the market has been, I wouldn't bet on it. I really wouldn't. Hey, what's up, gambling and gaming? Mm, I can just run, huh? I will say this though. As I like to watch other people, I like to watch how other people, or let me rephrase that. I like to understand how other people see the market. And I've definitely learned a lot from just watching other people. I think as we all should. The one thing though, that when I look at people and they don't have no structure, no ranges, no nothing drawn in their chart, and they're just trading, I'm like, dude, how the hell do you know where you're at on the chart? That is absolutely crazy to me. People that trade with naked charts. You have no lines or nothing, no support areas, no resistance. How do you know where you at on the chart? How do you know if you're trading into an area of previous resistance or previous support? Potential resistance, potential support. How do you know this? Got no lines drawn on your chart. Price action, huh? Okay. Yeah. Like I said, I mean, everybody makes money in their own way in this market, but I'm a price action trader and I don't. The first thing that comes, the most important thing to me is the structure and the price action around the structure. I need the structure. When I look at a chart that has nothing on it, like, dude, my mind goes like, dude, I'm not trading this. I would not trade a chart with no structure drawn out at all. I would not place a trade. Mm. So if we can't reclaim 65, so about right here. Yeah, I'm just interested to see if well, I mean what they do at a 245, 250 test. If we can see bulls hold that level, I definitely will agree with you. I definitely will agree because obviously that 245 level is significant. There was enough selling there. That was a break of structure to the downside at 245. So if previous resistance turns into support, I definitely can see a move higher. But if they fail here, we do see a breakdown, which honestly, like I said, the structure does not suggest that we are going down. That is not bearishness right there. That is straight bullishness. You have higher lows. You have higher highs. That is a bullish trend. That is a bullish trend. You don't short that. If you short this, you'll get trapped and clapped. So I would not short this. I mean, obviously the market ain't ready for no short. Now, if the market starts to range all night, then and you got the EMAs and the price action and the structure, you got it flattening out. Okay, maybe a short down here. And if that doesn't hold, then I know this ain't gonna hold. I know that for sure. I mean, there's no way that this holds again. There is just no way. So we'll get that move underneath that. But I think we get up to 300. I think they probably might find support here at 245. What I don't want, I mean, I'm trying not to do it because this could be a false breakout. This could be a false breakout, but and I'm not going to stay up and babysit this position for sure. I'm definitely not. Yeah, like I said, I'll just wait until the morning. I'll wait. I'll just trade the price. I just trade the reaction to the overnight. I think on Sunday nights, I mean, if the I'm probably going to make a rule. Just allow the price action. I mean, if it's not obvious, just let the price action kind of set itself up. If it hasn't, just trade the reaction. There's really no point, trying to buy this high. Actually, you know what, man? I think I'm being greedy here. I think I'm gonna put this. Actually, hmm, hmm, because this was actually at 60, and then I put it to 72. Hmm. Six. Hmm. Actually, okay, I'll just rock with this. I'll rock with it. I'll rock with it. It's just one contract. Hmm. I really don't want to do like 72 points though. 63 probably. Hmm. I'll basically be the move right there. Hmm. My bad. We'll go. Yeah, I think that's probably like the best plan right there, Dennis. Yeah, gambling and gaming. Yeah, I definitely think that 250, 245. If that is real support, we should continue to see a move up. We should definitely see a move up from there. Definitely, I definitely agree with you. And yeah, Corgo. Honestly, I was actually thinking about it this morning. I know I was actually thinking about volume and how that affects the markets, and I think that's probably an old way of thinking now. And what I mean by that is when a lot of people say, "Oh my God, we made this move off a low volume." Yeah, the market was trading on low volume, but it found a way to get to its objective. And what did it do? It generated the liquidity using the participants that were currently in the market by trapping them on the wrong side of the market and squeezing them outside or squeezing them. I mean, that's how the market has been reaching all new all-time highs since last year. It's trapping the market on the wrong side of the market, like these bears, trapping the bears so they can squeeze and use their stops for the move. Because I mean, the market is low on liquidity. It's going to generate it. If you're a gold or CL trader, this kind of price action is nothing new. If you trade gold, if you trade CL, they generate liquidity using the current market participants. You can see that the market squeezes out one side of the market and squeezes them out, and then they'll squeeze the other side of the market. Let's actually look at the volume right now on these markets right now. Yeah, right now. I mean, actually, that's actually more than usual at this time. We're usually seeing, well, I mean, the ES, yeah, that's normal, but for like the Nasdaq, we're seeing 20, 10K, 50K. That's actually pretty decent. I'm just gonna put gold on here just for, yeah, only 26,000. I mean, that's actually just pretty normal for gold. Gold and CL are definitely stop diggers because they generate their liquidity just by running stops. And that's why coming from CL, that's why I translate that to the Nasdaq, and that's why I see it, because if you want to be a successful CL, gold, or a commodities trader, you got to look to see where the stops are. And I just translated that trading over to the Nasdaq and ES, and it's like, wow, I see it. The bear has been feeling it all year. And what I found interesting is that we was talking about gold last week and how If you're not a gold trader, I would never recommend you to trade gold. You have to be dedicated. You have to dedicate your heart to trade gold. The reason why is if you're not a technical trader, if you don't know where your ranges are, if you don't know where your highs and your lows are and stuff like that, uh, gold is not an instrument where you can trade the middle. If you traded right here and went long, and you didn't have a 18 to 27 point stop, I think a 27 point stop is probably the most ideal stop for gold, CL, the Nasdaq. 27 points is probably, I mean, if you're getting your stop hit at 27, if you're still in a trade after 27, I think you're on the wrong side of the market. It's usually that. It's usually like that. But a 27-cent stop on gold is ideal, especially if you're trading on one contract. You're only losing $270 per trade, and the gold does not lie to you. If you're on the wrong side of the market, she will tell you, and she'll tell you by just doing this. And she's not gonna lie about it at all or nothing like the Nasdaq. But if you're not a gold trader, don't trade gold. Because yeah, it is only because if you trade micros, the micros are only $1. If you trade the minis are $10, and that's the same with the crude. I feel like that's a waste. A dollar is a waste of your time. And if you trade with micros, especially with these prop firms, they're going to get you with commissions. So that's why y'all guys don't see me trade micros anymore, because I looked at the commissions on these prop firms, and these micros are almost $2 round trip per contract. If you're trading with 10 contracts and each contract is almost $2, I mean, shit, you're paying like $17, $18, $20 in commissions. $20 in commissions. That's a lot. And these minis, they're about $5. So, I mean, that's why I went back to trading minis, because the freaking commissions are outrageous. And that's the same thing with gold. So it's like, well, one mini on gold, 27-cent stop, probably like a 90-point target, 90-cent target. That's all you really need on gold. And if you get in at the right spots, I mean, 90 points ain't that bad. It ain't hard to get. 90 cents ain't hard to get whatsoever. But you got to respect gold and prior structure, because if you don't, I mean, this will happen to you. You got to really know where you are on the chart with gold, because she is unforgiving. My trading partner Smith had to learn that the hard way. She is unforgiving. She will keep going, and you can see that she does not come back. Once she's chosen the direction, once you get a range breakout, like right here is a breaker structure to the downside, they came back and they sold the retest. I mean, that's classic on commodities. This right here is classic right here, man. Breaker structure, you sell that retest. With the Nasdaq, you don't know if it's going to hold or not, but the commodities is going to hold. And this is an A plus. Honestly, I would call this an S plus setup. Just waiting, just watching the price action and selling the retest or buying the retest. Those are really good trades on commodities. So you have another one right here where they broke structure, and look how little to no drawdown on selling that retest right there. Little to no drawdown. You see that breaker structure, selling that retest is 9 times out of 10 a guaranteed trade. And you got your points with little drawdown. That's why all you need is 27 cents. It's really 18 cents, but 27 cents is like, why not? Give yourself that extra room, the extra breathing room. It's only $270. You got that break of structure right there at that low. Them stops got ran. So yeah, this is actually the moment of truth right here. I mean, if the Bulls can hold this, they can hold somewhere. If they don't hold 245, but if they can hold this trend line right here, then we can potentially see it. But if we see a break, now this is like I said, I'm not going to stay up and watch this. It's 10 o'clock now. I'll probably end the stream in the next 5, 10, or 15 minutes. Just go to bed so we can actually be fresh for tomorrow's price action where the real movement is. If I see a break of 245 and a retest, I'm shorting that. Or because I mean it's all lining up. You got a previous area where the market rejected. You got this trend line, the support trend line where the bears broke and now they're going to come in and sell this. But I mean, you also got this trend line coming up too. So, I mean, if they break down this trend line, use this trend line as support, comes back up, and they sell that and hold, and then do we see something like this to where they come back up like that again, and then we see a move down? Or do we see them hold and we see them continue to make that move up? So, like I said, I'm not going to sit here and wait for this price action, especially with this slow movement. But that's definitely what that's what I would be looking for. I think we're gonna have to probably wait until London until we see something like that. Yeah, yeah, yeah. What's up, Toxic FX? Yeah, actually, I haven't taken a trade yet. Toxic FX. You know, and I appreciate that, Dennis. I mean, I'm a person that appreciates the process. That's why, for the most part, y'all guys will see me not take my target. It's either my target or my stop. It's not about the profits. It's about the target. It's about me being right. It's about me trading the process and the profits will come and all that other stuff. It's all the I prefer to understand why I'm taking a trade versus just jumping into it. And I know, I mean, I kind of been talking about a lot about Top Step, but Top Step is the only one that hasn't. So I got like 3 payouts last week, and Top Step is the only one that's still dragging their feet. That's why I'm not getting another Top Step account. Like now, it's you're not innovating. You're not. I mean, we all only thing we care about is the payouts. Like if you're not talking about a payout, we don't care what you're talking about. Like we want our traders to be blah blah blah. Okay, we just want our payouts. You dragging your feet. I got my payouts instantly from MFF. Instantly. We're still waiting on that top step payout. Not saying that they haven't paid out. I want to be very clear about that. I'm not saying they haven't. It's just that I got my other 2 payouts the same day versus, well, we gotta wait 3-5 business days to send money. Yeah, all right. He said that'll definitely be the last time I trade with Top Step until they change. Oh yeah, so I'm actually trading I'm trading the trading view competition. So right now I'm up about $71,000 in this account right now. 71,000, and I did that all last week. Uh the number one trader right now is like up 3 million. I'm pretty sure that's changed probably. I'm pretty sure that's probably well, actually I'm not going to say that cuz I don't know. But uh hmm. I kind of wish they told you like what place you're in. Okay, so yeah. Like the number one trader right now is up like 3 fucking million right now, almost 4. Right now I'm in the 29th place or 2900th place. It's like how the hell they made a million? Like what the hell are they trading? They probably trading forex or something like. But I'm not gonna sit there. I'm not trading forex. I don't even want to know how to trade forex. But I'll just stick with the futures. But I just hate that. So I don't know if I can trade more than 10 contracts. They only allow you, or at least I've only tried. Let's actually look at that and see if I can probably put more than 10 contracts on. So right now I got 2 on. Let's see if I can put like 20 on or something like that. Because every time I try 20, it tells me I don't got enough buying power or nothing. Yeah, it says that I don't have enough funds to complete this order. So how the hell they up a million on 10 contracts? Like how the hell the hell? How they up like that? I ain't hating or nothing, but how y'all up like that? If if you're only oh shit. Oh my god. Yeah. Um hmm. Yeah, I probably just lost some money on that. Oh, should I gain? Oh shit. Well, never mind. I got some money on that. Shit, never mind. Oh, all right. Well, now I'm up $74,000. Anyway, trade, create new order, uh, buy stop. Let's see, because I can, like I said, it won't let me go more than. All right, so I guess I can. I guess I can put. Well, no, because they'll allow me to do it, but they won't let me fill the order or nothing. It's just they will only let me trade only 10 contracts at a time. I mean, honestly, I ain't gonna lie. That does look bearish. That looks super bearish. But we'll see if this holds right here. All right, so I mean, if it happens in the next 5 minutes, I'll take it. Excuse me. I really want to see them. I really want to see them break this or hold this. I want to see what they do here at this area because this is going to be very important. What both sides of the markets do here is going to dictate the direction of the market. If we see a hold, I mean, shit, the next level is 320, 318, 320 really, but I kind of want to front run that. Probably 350. I mean, that's the psychological level. It's either 320, 350, sometimes 380-ish, and 100. Or, I mean, or the 20 level, 50, 80, 100. Those are your psychological levels. Oh yeah, I took Bitcoin out. Retrade that thing. So Corgo said that they timed them out because, yeah. So it seems like a lot of these. I mean, I really don't know what is going on with these prop firms in the CME. Obviously, the CME wants more liquidity in its markets, and these prop firms are now making that liquidity available to them with these quote unquote sim accounts. Now we've talked about this. It's highly unlikely that we are not touching real markets, even though we're being told that all of this is simulated, we're trading in a simulated environment, et cetera, et cetera, et cetera. But based on uh, the sim to funded solution, the language that they use in their documentation suggests that everybody is trading in the real markets. It's just that, how do I say this? So it's like we're being told that they're simulated, but it's probably touching real markets. I don't know how that's happening, but honestly, I don't care. But it's kind of strange now that once, prop firms became very popular and a lot of people are now trading them, the ES don't even trade the same no more. The Nasdaq doesn't trade the same anymore. The market is so erratic now. It's trading so differently. It's, well, what the hell changed? What changed? In my opinion, what changed is obviously all the prop firm traders that are now in the market. And I'm starting to see a trend where the moves are starting to happen after 310. And I'm not trying to sound like a conspiracy theorist or anything like that, but I mean, if you're trying to get into a position and you got all these quote unquote degenerate gamblers in the market and their cutoff time is at 310, after 310, that's probably when you want to get into a position. Because if you look at your charts, you see all the moves are happening right after that cutoff mark. But I'm going to digress right there. Because, like I said, I don't have any solid information that would suggest that we're not or that we are. But a lot of them now, like a lot of these prop firms are saying, oh, you can't do this. Oh, you can't have this much drawdown. It's like they're trying to, quote unquote, for the lack of better words, train us because they've already, or actually, let me rephrase that, condition us to be more, what's the word I want to use? Risk adverse traders versus being degenerate gamblers. Because we all know after Apex, all the prop firms conditioned us to full port to try to get us to pass these accounts in one day. Because if it really was about risk management, if it really was about trying to make everybody into a better trader, they wouldn't give us access to 10, 15, 30 mini contracts knowing exactly what we would do with that access. You wouldn't give nobody no damn access to 30 minis with a $5,000, $2,000 account drawdown or a trailing drawdown. I mean, we were always conditioned to scalp, heavy size, and potentially blow our accounts to keep us in that buying eval cycle. But I think the CME is pushing down on these prop firms and saying, yo, we don't want that shit no more. And now we're seeing all this reconditioning of, okay, now we want consistency. Now we don't want you to full port no more. Now we don't want you to have draw down 30% past your highs or whatever rule they're coming up with. And they're denying payouts now and stuff like that too. So, and then they're using ambiguous wording, lawyer language, where it can be interpreted to fit any narrative that they so choose. and they can use that language to deny payouts. So I'm starting, obviously I think everybody is starting that trend. And like I said before, I feel like, I mean, we've talked about Top Step, and when they came up with Top Step X, I was saying that they was not going to make the 10-to-1 micro mini equivalent. They were only going to make that available for Top Step X to try to get people to only purchase that, because if they made it available in Trade-of-8, they made it available in NinjaTrader 8 and other platforms, then there would be no need to trade Top Step X. And we talked about it before. They even said, yeah, it's only going to be exclusive to Top Step X. It was a business move. It just made business sense for it to happen that way. And I feel like with Top Step not being innovative anymore, with all these other prop firms now, not only, I mean, I'm not going to sit here and say that they stole their model, but they're utilizing their model. It's cheaper, and the path to payout is better. It's, I mean, like I said, I can't find a reason to buy any more Top Step accounts. I really can't. I really can't. And they're not doing the reset promos anymore. So it's like, where are they making their money at? Obviously, that's none of my business, but I mean, I got to think, where are they making their money at? And if they're employing payout denial stuff, like they're implementing rules to, all right, well, we're not going to pay you out if you do this crap. I mean, we've seen this before. I mean, we're seeing it with Apex when, all right, so the money's not coming in the way it used to now. So now we got to start denying payouts now. So now we're seeing it from Top Step. Not necessarily saying it from Top Step, but now it's like, okay, now we're getting rid of this traders. Now we're getting rid of that. So it's like, well, anyway. But again, I want to make it very clear that this is just speculation. This is just my assumption. I'm not affiliated with Top Step, so I don't know. I can only go based off of what they're doing. And what they're doing is what we've seen in the past from other prop firms. UProfit used to be a great prop firm. And now look at them now. They're a bunch of scammers. They scam people out of payouts. They scam people out of their accounts. They scammed me in terms of telling me that I couldn't renew my zero account. When they had that swing account, they expired my account on the same day. They told me that they couldn't charge my card, and they wouldn't allow me to, they wouldn't send me a direct link to pay for it. And on the same day, on its renewal, they canceled the account. So it's anyway. That's always going to be a red flag for me when these prop firms, like, they want you to keep buying evals, but then when it's their turn to hold up their end of the deal, it's, oh well, this and that, and you broke a rule, or you violated our terms of service, blah blah blah. So we're not going to pay you out. But they don't say shit when you're buying the evals though. Yeah. So yeah, like I said, Dennis, there's other prop firms out here. In my opinion, MFF is right now is the best. They're the fastest payouts. Now I haven't tried the alternatives. The only alternative prop firms that I'm trading right now is Blue Sky and Tradeify. I haven't been with the payout process with them yet, but I have with MFF, and right now they're the fastest. As soon as it gets approved, it's sent right to Rise, and your payment is sent right to your bank account. I mean, it's instant. I got 2 payouts from MFF, and I'm still waiting on my Top Step payout. So, uh, and that all happened last week. Yeah, I know, right? Cargo. Yeah. Yeah, so it's like, I mean, I work in this world where the politics and the language and the words, you got to pay attention to the words people use. You got to pay attention to the words that people use because it's kind of like, I mean, it's interesting where no matter where you go in the world, human nature, basic human nature is everywhere. Instead of saying, because everybody wants to appear strong and solvent, and so they use words to dance around because they legally have to tell you the truth, but it doesn't matter. They can like they're required to tell you the truth because if they don't, they'll be held liable. But if they use words that dance around the truth and you misinterpret them, well, that's your fault. I mean, they told you. It's just that you misunderstood what they're saying. So instead of saying, "Oh, well, the money is drying up. We're not getting as much people paying for the combines anymore because now there's so much competition out there." Instead of saying that, they'll say, "Oh, well, now we're finding reasons to not pay you. If you break these rules now, we're not going to pay you." But you can just keep buying evals though. I mean, shit, you can keep buying them, but you get to that you start fucking up in that funded account. Oh yeah, we're gonna find reasons not to pay that out. I think MFF is the way that it is because everybody knows what happened on the forex side with that company. That's probably why they're so like, no, we're just make sure you get your payouts. We're gonna make it the fastest. We're gonna give you multiple ways to get it because they're trying to still clean up their what happened on the forex side. I mean, everybody was using, I forgot what that shit was called. It's been so long, but they were the reason why they stopped doing business with prop firms altogether. And that whole fiasco, if I'm not mistaken, they've rebranded from My Funded Futures to something else. I really don't know. They rebranded their forex side. But that's what happens, man. When you lose people's trust, it's hard to get that back. You really have to jump through hoops. But obviously, in my opinion, I felt like they've kind of redeemed themselves because, like I said, all we care about is being paid out. If we play your game and we win, we expect to get paid out. The same way that when we pay for a combine and we don't tell our banks to charge that chargeback, the same way we expect you to pay out. And I understand that these prop firms has been having problems with chargebacks. I get it, but yeah, I saw that. Yeah, I saw that with Apex. Looking at so Apex was making, and honestly, that's actually for an online casino. That's actually on the low side. They're making like 14 million a month, 9 million a month. They're averaging about 13, 12 million a month. That's on the low side. Just think about what I just said, dude. That's the low side. All I know is that once I activate my Apex accounts next month, I'm only trading the ES with those damn things. I'm not going to give Apex any reason to deny any of my payouts. I'm not going to give them any reason to deny my payouts because it can get ugly on the Nasdaq. We all know that. And with that, you can't be down more than this, or you can't get back more than that rule that they got. Yeah. I mean, we all know the Nasdaq pulls back for absolutely no reason, just to go in the intended direction. So I'm not going to give them that power. I'll just trade the ES. I'll take it slow. All right, so looks like we got that bounce at what is it, 249, 250, gambling and gaming. It looks like we got that bounce. Honestly, this bounce should be not a surprise to anybody. It really shouldn't. I mean, this structure is super bullish. Yeah, that should be no surprise. Yeah, I still wouldn't have gotten long there. I wouldn't have gotten long there. Like I said, I'm just gonna wait until tomorrow. Just gonna wait and see what happens. I do got I mean, as you can see, do have a sell limit up here. I do want to participate up here for a potential pullback short. All right, so I mean, we'll go over everything that we talked about again today, and we'll just end the stream. If you look at the ES, I mean, we haven't talked about the ES. I mean, we got a break. I mean, we got price to come into resistance. We had a break. They came right back into this potential, I mean, this area of support. Got them right there, and then price is going up. I mean, if we see a stop run, I mean, obviously, I mean, the stop run is kind of going to be obvious above these highs. You got the bears holding this thing about 3 times, 4 times, if I'm looking at it correctly. So we'll see a stop run above that high. I mean, we could see a retest of 146, 147, but I'm probably going to be looking for a 152, 150 rejection, probably 155. I think that lines up 152, 155 rejection on the ES. That's probably what we see. Yeah, probably like 155. Maybe. We'll see what happens there. We'll see what happens. The Nasdaq, like I said, I think probably like a rejection at 20, 27, 28, 20, something like that. Yeah, I'll probably, I'll just keep it right there. I'll keep it right there. Ooh, look at that. That would have been nasty. Oh, what is FFF? What's that? I mean, the only prop firms that I've traded is Tradeify, Blue Sky, and MFF. That's it. And Top Step. So usually I go on and I trade New York Open. I trade New York Open. Oh, okay, never mind. I misread that last message. Mm. But yeah, I definitely agree. I mean, shit, Toxic FX. We run them highs. I mean, shit, I mean, where else? That's the only place for it to go. That's the only place where it could go. We run these highs. That's where it's going. Next level is 6,200. We'll probably see price probably stop like maybe like 195, like it always does. We all know that it never touches that 100 level the first time. It never does. We see a rejection before, and then we see the pop back up in the second time we touch it. That's usually how that works. Okay. All right. So again, just kind of based on the data, we'll go for this and then we'll end the stream here. All right. So again, this week, I mean, there has been a reduction in their long contracts. Uh, since the last week of January, they had 81,000. They reduced it to 70,000, and they're reducing it to 68,000, and yet they've been increasing the shorts. But overall, we're still long. Overall, you can see that they're 56% long this week and 44% short. And overall, there are 14,870 contracts net long this week. So I do expect more bullishness, but we could see a drop. So, with the amount of contracts that they got trading, I would find it hard to believe if we go above all-time highs based on the amount of how long they are this week. But it wouldn't be a surprise. I mean, at this point, we shouldn't be surprised by that now. We shouldn't. But they are reducing their longs and increasing their shorts gradually over time. So, but all right, guys, that's all I have. We'll definitely come back tomorrow morning. We'll definitely earn some more money, find some more opportunities to get more payouts going into next week. And with that said, have a good night, everybody. Peace out.